Sandeep Sikka joining us now, Group CFO, Somany Impresa Group, HSIL Limited. Mr. Sikka, good morning. Now, strong performance in Q4. What would you attribute that to, and what's the outlook going forward given the second wave? When talking about growth, which segment in particular did you really see driving numbers this time?
Good morning to you. I think last year we started with a bad note due to the COVID lockdown. Given the fact that HSIL is today a manufacturing organization servicing B2B clients on the packaging side. But we've worked on various efficiencies internally. We have been able to build up efficiencies by around 3 to 4% in the year. We have worked on various alternatives on fuels so as to bring down the cost, which is the fuel costs are rising right now. And we have been able to, perform in a nice manner for last 2 quarters, wherein the consistent performance has come through. Going forward, we feel that the COVID lockdown effect will be in pockets. It will not be the mega impact as we experienced last year. So the demand should come back, I think, in next 2 to 3 months' time.
Okay. Margins are at about 15.3%. And how sustainable are these margin levels in particular, given that the company has also seen certain pressures in the last few quarters?
So these are margins which we have demonstrated now over last 3-4 quarters, other than the 1.5 quarters which was relating to COVID. So if you track our performance over last 8 to 10 quarters, we have been able to build up the margins, and we strongly feel that these margins are sustainable. Of late, there has been input price hikes of various raw material, which we are now talking to our customers so that if we can in a near future can also increase our selling prices. So we should also build up our margin base.
Sure. Sandeep, also wanted to talk about the packaging product segment as well, which has seen a very good growth in the quarter gone by. How is the demand here, given that the company delivers to pharma, FMCG companies? What is your growth expectation from this segment at a time when there is the added input cost pressure as well?
So almost 50-55% of our production on container glass goes to liquor and beer industry. We also service pharma industry, which is around 8 to 9% of our production goes to pharma sector, which covers around 15% of the pharma demand. Going forward, the demand of the liquor, we feel that it will continue to be very, very strong. Although there can be again some hiccups with the current lockdowns in various places, the demand of pharma is also building up. Another big contributor of our percentage sales to the sector is the food sector. So wherein we are seeing a major demand coming through. Our volumes to the food sector has increased over last 2 quarters, given the fact that people are buying more and more online and which require more containerized packing requirements. So we feel that overall demand, let it be from the liquor industry, let it be the pharma, and let it be the food. So all should remain strong in the near future as such.
Sure. Could you help us understand what is the current market share in the packaging product segment, and also do you also produce the vials used for COVID vaccines?
So this overall container glass market is around 7,000 crore market, and we service around 18 to 19%. We have a market share in this industry. As far as the vials are concerned, as I told, around 8% of our production goes to the pharma sector. But these vials, we do make vials and we sell to the pharma industry. But these vials have different categories of authorizations from the product manufacturer, the pharma manufacturers. And the certification processes have a lead time of 1 to 2 years. We are now investing, a good amount of money into development of the new high-end facilities. We are investing around 220 crores into development of 154-ton, furnace, which will be primarily focusing on high-end food and, high-end pharma requirements. So this capacity should be up running by Q1 of the next financial year. and maybe followed by, as far as the pharma is concerned, another 6 to 12 months time for authorizations.
Okay. Can you give us an overview about the rising input costs? And we touched upon it, of course, but in terms of margins, but overall in terms of the industry scenario as well, if you could share with us what you're observing on ground.
So one big cost increase has been the input fuel prices for us. So for manufacturing glass, we have to put an input material, let it be the glass scrap, and then it is melted. So for melting, we consume a lot of fuel, and we have now developed over last 3-4 years of investments. Now we can use all alternate fuels. Let it be the furnace oil, let it be LPG, let it be coal gas or the natural gas. So over last 2 quarters, we have seen the input prices for furnace oils have increased drastically. So we switched on a lot to the alternate fuels, so that we can maintain our input fuel cost to large extent. But still, despite that, other input elements like packaging material cost has increased. So I think we should be able to pass on these to our customers, maybe with a lag of a few months from now.
Okay. And now that we're seeing, an increased interaction when it comes to repairing and maintenance, even the building product segment, are you going to be focusing more on this?
Yes, building product post demerger now we are pure excellence of manufacturing here, and over the last 2 years we have built a lot of competencies internally to further improve efficiencies. Our pipe sector, pipe production, manufacturing, they have seen a good volume increase. Our products have been well accepted by our customers and the ultimate markets. On an overall basis, in last quarter to quarter, we have seen around 25-30% growth happening on the building products also manufacturing side.
Okay. Any diversification that you're looking at this point? Again, packaging products are one area of focus. Anything else that you're going to be looking at going forward?
No, the focus today is to build more capacities towards the manufacturing the container glass, and because we feel strong about this industry, the potential for this industry is good. Maybe in next 3 to 4 years. Right now we are working at almost 87% capacity utilization on our glass unit. So we have a limitation. So we are doing capex in terms of expansion of capacity. As I told you, around 150 tons we are doing, which is a greenfield project in Telangana. So we may be coming up with newer projects, to set up facilities in the other part of the country over next 3 to 4 years. So it's more of an organic growth right now. There are inorganic opportunities available, but they are contingent on many things, so it's very difficult to comment on that.
All right. Thanks so much for joining us this morning, Mr. Sikka. We'll leave it there. Let's take a very quick break. We'll be back on the other side.